Oil has retreated from its 5-month high. Energy prices are falling again amid fears of interest rate hikes by world central banks. Thus, another rate increase by the US Federal Reserve may well lead to a slowdown in economic growth throughout the world and in particular in the largest oil-consuming countries. Investors are concerned about the outlook for the global growth, but the current decline in oil prices is likely to be short-lived. After all, in addition to recession fears, there are risks of energy shortages in the face of oil production cuts. Yesterday, the American Petroleum Institute reported that crude oil inventories in the United States decreased by 2.675 million barrels. However, the news failed to support oil prices. A decline in stockpiles was quite impressive, which somewhat discouraged market participants, causing certain concerns. Apparently, investors decided to wait for data from the US Department of Energy to be released today. If it confirms a significant reduction in inventories, oil quotes will most likely resume gains. Much will also depend on fuel reserves, which are also expected to drop significantly. In other words, oil has a chance of rising to $90 per barrel in the short term. From a technical point of view, Brent crude oil futures have been falling for the fourth trading day in a row. The bullish run was limited by the resistance area of $87 to $89 per barrel. As a result, the volume of long positions decreased. To extend losses, the quote needs to fix below the 83 mark. And this is what we witnessed at the time of preparing the material for this video. Otherwise, the market will get stuck in a sideways range between the levels of $83.5 and $87 per barrel. Let's get back to interest rate hikes. Recent statements by Fed officials hinting at further monetary policy tightening in the United States are keeping gold traders on their toes. Against this background, the yellow metal dipped below $2,000 per troy ounce. It's the steps of the US regulator that will determine the further direction of the market. If the view of Richmond Federal Reserve Bank President Thomas Parkin is echoed by other Fed members, market sentiment will shift. If the price fixes below the $1,980 mark, gold prices will hit toward $1,900 per troy ounce. Alternatively, the metal will resume its upward move, provided that the price returns to the area above $2,020 per troy ounce. Speaking of the ruble, the situation remains unchanged. The Russian currency is still trading in the tight range of 81 to 82 rubles per dollar. Notably, the main driving force is largely internal factors. In particular, they include the actions of the Bank of Russia and the Ministry of Finance. At the same time, it can be noted that the ruble is gradually becoming less prone to external factors, such as steps taken by the European Union or the United States. And this is because Russia confidently increases international settlements in rubles or the currency of other countries. This process makes the ruble much more resilient in the face of sanctions. To some extent, it even protects the Russian currency against Western economic pressure. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.